to me, a good staff accountant is somebody that can handle the AP. They can handle the reconciliations. They can hit the singles, and maybe an occasional double. But they get overwhelmed, or they don't understand how to cash flow forecast. Or maybe they don't know how to do the audit facilitation. If, again, some of this, we've got 2 webinars coming up. One with our friends next door, Money for Ministry, and one with Citygate. So I'm not pushing Citygate here. I'm just saying, if we really want to dig into this stuff, join those webinars. But what I've seen is the tension in the organizations with the director and with the board is when they have a staff accountant that they're expecting them to try to be a controller or a CFO. And so then what I've seen is when you've got, and I'm not pushing our book here, insert somebody else, but if you've got a CFO that can understand how to leverage the staff accountant to let them do what they like to do and what they're capable of doing, but then you communicate the big picture and you make sure that everything's getting done on time, that budget's getting out before the year starts, that the audit is getting prepared for, that the board is getting their reports in the format that they want, that removes a tremendous amount of friction. And what I've seen is when you start to come in, we were talking about this earlier, sometimes people get fearful and they get antsy that their job's going to get taken away. And so those things play into honest and open communication. And what the director wants, y'all know what it's like to be a director. I don't. You got 150,000 things going on a daily basis, and you just want to run the organization, and you just want good information. But what I've seen about to really try to double down on this is if the staff accountant is in the wrong role, maybe they really do care, and maybe they're a good person, but they're getting stretched beyond their capacity and their skill set, and it's just creating a lot of tension. And then that's when the audit checklist starts to get really long. That's when the auditor gets unhappy, or that's when the auditor drops because they can't handle both sides of it. And so what I've seen is when this model really works well, it's like if you all try to engage in a relationship with honesty, but humility, but service to the client, you're going to understand where that staff accountant, where their lane is. And then you're going to continue to layer in the higher level support and expertise to fill the gaps that, it really takes somebody that knows what they're doing. And then in our case, or somebody like our case, you're doing that without having to spend $120,000, $150,000 a year for a CFO. And so I think for us, what we've seen, to your question, we see organizations being smooth and functioning at $7, $8 million or less with a strong staff accountant or controller and then a fractional CFO. So 1 and 1.5 people. And what we're seeing right now, specifically with people that are really grant reliant, their revenues are decreasing and they're overweight staff-wise. And so they might have, like last week, we were with an organization, they're going from 9 to 5, and they have 4 to 5 people, finance and administratively, and they need 1.5. And there's plenty of margin there to clean that up, but it's extremely messy to go through that because people don't they just want to hold on sometimes to, what they've been doing. Is that helpful in the differentiation?
Yeah, one thing I'll say, I remember this one local nonprofit back home. I think you had the case where you had somebody as a staff accountant asked to do more, and so when they don't know what to do, they do workarounds. Well, then she got sick and took a leave of absence, so someone came in and interpreted her workarounds in their way as a workaround. By the time it all got done, then you had a real mess, and you had to bring in the big people to straighten it out. But when their policies weren't written and they weren't followed and all of that, it just got away from them really fast.
Yeah, and to your point, you were talking about an IT audit before. But I was in a meeting on Tuesday this week, and the existing staff accountant, let's just call it that for now, they were creating more things, to your point, more things for them to do on Excel for approval that were completely unnecessary, but the director had no clue until they had somebody else coming in that was like, hey, we're not trying to discredit anything going on here, but let's cut out all this excess bureaucracy back and forth. Let's directly import the data into QuickBooks. Let's use that as our single source of truth, and that's going to cut these two steps, and then you're not going to get frustrated with all these emails going back and forth. And so to go back to your point, sometimes people like to add steps and things to protect themselves, and maybe they know it, maybe they don't. And so, as I mentioned, we built this company targeting organizations that we believe we can serve 7 to 8 million and below. We do have clients above that, a lot higher than that. But normally that's additional manpower to come in and to handle audit support or to handle adjustments and entries to get things up to speed. So we see a wide swath of examples and clients. But what I found with meeting with directors and seeing the organizations, you kind of have two different types of mindsets. One, you have people that it's like they started small or they're very frugal, and that's very admirable. But it almost feels like they're always 1 to 2 steps behind. And then you have people, maybe they came from business, or maybe they've come as a director at another organization. But maybe they're not wasting money, but they're thinking about where they're going to be a year from now. And they start to put those systems in place, and then they grow into that. And that gives them excess capacity. And so I think the way we view our work, we're not trying to push anybody to either of those camps, but I would say the best running organizations are trying to think about where they're going to be a year out, and then they go ahead and start making those decisions. As an example, accounts payable, right? Some people still do handwritten checks. Some people still print checks. That's fine. But Bill.com is a software that integrates into QuickBooks Online that you can do. If it's over $5,000, you can put the 2-signature authority on it. If you want, the head of facilities to have their expense account and to have, their designated authority on that, you can use technology to completely streamline the AP process. So we do AP for organizations that are, 2,000 miles away, because that's how technology is continuing to integrate in the organization. We still have clients that are on QuickBooks Desktop. They're going to stop doing QuickBooks Desktop. We've talked about the demographic of accounting staff. Some people they've been seeing it the way they've been seeing it for the last 20, 30 years. Well, there's not going to be a QuickBooks Desktop. So you got to go online. You got to think through, where's the organization going to be? Payroll and HR is not, we do payroll for clients that need us, but HR, there's HR services out there that handle HR and do it well, more cost effectively than somebody in-house. It's not about trying to take jobs away, but that's efficiencies and cost savings to the client. And so really just from the beginning, I want to just communicate that I do see that in the eyes of the director, the people that are willing to be a little bit, think outside the box, they're thinking about where they're going, and they start to move in that direction, and then that just gives them more margin day in, day out. So for us, if we're doing our jobs right, we believe in anybody in our space that we are helping lay and build and operate the financial and operation foundation of the back office so that they can focus on serving people day in, day out. And so ultimately anything that we're talking about has to be of value. It has to be giving capacity back. It has to be making something easier when there are problems. You got to be responsive. You got to address it. You got to address it with your team. And but the whole job is to take something that's been a pain point and make it not a pain. That's it. You're never going to make accounting fun, but you can make it to where there's not all these surprises. Common challenges that we see is people have no idea what the cash flow is. They just don't know where they are. They don't know what's ahead. They might not have the historical data to give them where things are headed. So they always feel like they just don't know. They're flying blind. So to have really good to have good reports on cash flow, you got to have really good reconciliations. You got to have really good organization as far as in the chart of accounts. You got to have separate designated funds versus unrestricted funds. But if you run all those things in a clear way, and you have a budget and budget to actual, you're going to know what your cash flow is. And that's going to give you more confidence to make decisions about how you run the organization and how you're staffing. And if something's off, like we have clients that as they get better insights and better data, they'll be more opportunistic. They'll take some risk. But then like right now, it's been a really tough first quarter. I don't know how it is for y'all, but we've seen certain clients, they're under a lot of pressure. And so maybe they got to pull back, but at least they're going to be able to pull back with leading indicators versus lagging indicators. Second thing, we see this especially with people that may not have a lot of experience. Maybe they have a great heart. Maybe they love the work. Maybe they started early on. They do everything. But they really get confused with like donor restrictions and things like that. And just really good communication and setting those things up so there's clear checks and balances on that. That's a common issue we see. Board reporting. I mean, you were talking about it earlier. Whether he's right or wrong, a lot of the times people on the board, they're business people. They're people giving money. They're people that run organizations. So they're used to looking at P&L statements, and they're going to want it a certain way. Sometimes we've seen that it creates stress. You go back to that staff accountant position. If they don't really understand how to get the information in the presentation or the manner that the board wants, then the board's not happy. They're stressed out. They're not happy. And so really trying to understand exactly who the decision makers are and what do they want, that's hands-on work. That's, you're getting ingrained into, because we're not coming in, and people like us would believe if you're doing the right job, you're not telling the client what systems he should use. Like we're not saying if we work for you that you've got to use Sage. Or if we work for you, you got to use QuickBooks Online. You got to meet the clients where they're at. So therefore, you got to get to understand the board. You got to understand the reports the way they want it. There's a lot of times what we've already discussed. I mean, there's situations where people are doing stuff pro bono, and that's good. That's saving money, but maybe the expectations to somebody doing something pro bono is not the same as what it would be as if you were paying somebody to do it. And so we see sometimes people, they kind of box themselves in a little bit but then, when you're starting to hire somebody to do something, you can hire them, fire them, you can hold people accountable. And then their own personal stories get so intertwined into the organization where some of this decoupling sometimes it can be uncomfortable. But we see that a lot. Surprises during the audit or compliance cycles, we see clients that haven't done a 401k audit in years, or maybe they're behind on just general audits, and then maybe that ties up giving or grants. Even right now we're seeing with auditing firms. We had a client get dropped by their auditor last year, and they got dropped because of all the things on the report and how the service was being done, and they just said, this is too much. We just can't do it. So they pulled out, and they had a state filing within a few months. And so fortunately in that situation, we were able to bring 3 auditors to the client and let them choose which one they want. But and this was from an outside firm. So these auditors, to go back to your point, what you were sharing, their fees are only going up. But sometimes people get boxed in with an auditor, and you need somebody to drive that relationship. So whether it's somebody at your organization, or maybe it's somebody that you're looking for at a third party to drive that, but you got to stay on them.
I just want to say this, and I know we have insurance represented here. So I'm just Reverend John Gray in Norfolk, Virginia, but I found it interesting that both the CPAs and the insurance people the ones we were using said, look, you don't want to be changing CPAs every year. You want, if you do that, then you're going to have to train a new group of people and insurance. Go with the broker that you have and let them do that. And in healthcare, we have very few options in our state. It really is just one. And then there's the government program. And so, but I found it interesting that best practices are to shop these every year until the CPA you have, the accounting firm you have realizes, well, then there's going to be some competition to my price, and I could lose the job, by doing that. And so we don't. I mean, we're not the experts that you all are to know what are good practices. We didn't establish an audit committee until Charity Navigator said that's what's holding you from a 4-star designation. So we formed an audit committee with the board. But until then, before then, and this is just what happens. The idea is you do an audit, as I understand it, please correct me, Sandy, and then that's supposed to go to your board for review, and then back to me, and then presented at the board meeting that you approve the budget. It wasn't happening that way because it didn't get done till 11th hour anyway, and there was no time for the board to look at it and kind of pass through their eyes, and then to us. But let me tell you, we wanted that 4th star, so we put together, and we still got it done at 11th hour, but we just don't know these things unless someone's willing to walk through with us and say, this is what you need to do. But then you got to back way up if you're going to try to get those things done. So it's it's just something that we fall into some of these and you're on a board of a nonprofit, I think.
Yeah. I just started that, but the insurance world, when you're shopping, it makes a lot of sense. But so we as nonprofits, we're not experts in these things, and we need obviously we need coaching and direction on all of these. And with our boards, our board, I mean, they kind of accept whatever I give them, and even though there are a few that are finance background, but we just need help along the way to ensure that when people look under the hood, we're doing things. You would want to be you have a fiduciary responsibility, so you definitely don't want to be a board member where things are not done well. Right. And so we need a lot of, I don't know about you guys, I need a lot of help.
Well, to go back to your point, what I've seen psychologically within the organization, you want to put out the fires, and you want to stop the bleeding, and then you want to continue to improve the organization at the end of the day. And you can only do that if there's stability. And then you also want to understand, however you go about that, what are the best practices that can be implemented to our organization that we're not currently doing that we can do over the next 6 months? So maybe that's AP, maybe that's Bill.com, maybe that's audit committee, or maybe that's QuickBooks Online. Whatever it is, but you can't, people are always behind the 8 ball, at least generally what I've seen. But when you get stability, and then you can start building the relationship, and then you start to make the advancements that you're talking about to really make something in a better place. And obviously there's a lot of wonderful organizations, but unfortunately for the most part, we just see most of the issues. And these are kind of the common things that we see time and time again. And it doesn't matter. It doesn't matter if it's a nationally known brand or if it's a extremely small ministry. Like, that's another thing that I've learned is, like, we all have challenges. Every organization does. And it doesn't matter if you see them on Channel 5 advertising or if you've never heard of them before, but it's just who's going to, from a leadership standpoint, operate the organization and then move it in the right place. And then the last challenge in this section that I'll share is just, it's very common for people to talk about, we're a nonprofit space, we can't afford top of the line money, and so they feel stuck. But hopefully, as the world becomes more of a transparent place through technology and scalability continues to happen, clients are going to continue to get options that are high quality, but they're valuable to the organization, and you're not paying excessive fees. And so what I mean by that, for example, we can take or somebody like us, it's not just a push for us, but let's say we have a data entry person, or let's say another firm like us has a data entry person, and then let's say they have a staff accounting person, and then let's say they have a CFO. For an organization that's, let's say they go hire an in-person CFO at $4 million a year or $5 million a year, what's that CFO going to do all day? I mean, is there really 40 hours a week worth of work for them to do? Maybe so, maybe not. And if that's the case, go do that. But in our model, through technology and transparency and good communication, if you're doing what you should, you're spreading that team out over 4, 5, or 6 clients. And so the same people are servicing that account on the data entry or the accounts payable or the reconciliations, but the client at the end of the day is getting experienced help at a more efficient price. And so what we're seeing, as we've talked about these trends, there's less people going into this space. There's less people that know nonprofit accounting. So what's the impact to the customer? And so, this is the same example of how HR has come into it with outsourcing HR. And that's been a good move for a lot of folks. We also see, we talked about this earlier, and you'd have to just contact, I can follow up with you, but when you're connected to people that know their space and they've seen a lot of reps at their work, then you start to leverage relationships. So, like, for example, I forgot his name. He's out of Michigan, and I forgot the firm he was with. But, clients, I don't know what the minimum threshold is, but I know when Memphis Union Mission did the $30 million in capital projects, they were able to save 10%, on it by doing tax credits. And so my point is, when it's like anything else in life, when you're using people that know their lane and know their space, then they're able to make other introductions to help save money on things that are bigger and more strategic. And sometimes it's hard to know. It's hard to know who knows that space. And his name's John, it's not McEwen, but he's out of Michigan. But that's all he does is take missions through and nonprofits through capital projects, or he'll put together the tax credit program. And you're saving 10% on $30 million is $3 million a year. So that's been a very fulfilling thing in our space. Like Infinite Giving is a company out of Atlanta, and they do cash management, stock gifting, crypto gifting, and endowment management. And they're backed by Morgan Stanley. But we actually invested in that business because, they only serve nonprofits, but we saw value to our customers. We saw value to the idea where they're charging 0.62 basis points, where a community foundation even charges more than 1%. Traditional asset managers charge 1%, but they're embedding their the Stripe donation tab into the website of the customer that sweeps through, and then clients can have an operating account, and then they can have their endowment account or their reserve account, and then they can put those in treasuries or equities or bonds, whatever your risk tolerance is. But that's new. That completely cuts out the traditional old school method of the fee structure of the asset manager, but they're adding value to the nonprofits on the fundraising side. And you're saving almost half on a 1% or 1.5% fee, plus reinvesting excess cash. We have clients that are sitting on, $1 million a year in the checking account, getting nothing. Or if they put that in T-bills, they're making $40,000, $50,000 a year. Now, maybe that's the right thing for them to do or not, but we get to see, being a part of nonprofits and loving this space and wanting to serve clients, you just get to see a lot of different cool things that you can pass along to your customers. Just like the guys next door. We have common clients, and it was fun hearing the stories of people, spending a pretty low amount of money a month in getting estate gifts, legacy gifts, where I mean, and I wasn't hearing it from not Dan, but forgot, drawing a blank. I was hearing from the customer, but I mean, they're getting 10x on return on investment on the legacy and estate gift. So it's fun when you get to see the other people that are focused on the customer in the nonprofit space, or like insurance. But you're just able to share best practices with the customers. That being said, I'll pause here. I got some examples and some takeaways of like specific clients, no names, but kind of the challenges they went through, and then how through just strong leadership and the right people, they were able to get to the other side. We're right at 30 minutes. Is there anything that we haven't talked about so far that you're dealing with day in, day out that we could address here that would be helpful to discuss?